2 words, Revo Fitness. Here's a few more. Simple, 24/7, reformer Pilates, body scanners, massage chairs, squat racks, free weights, pin and plate loaded equipment, no lock-in contracts, no bullshit. All of that and more from just $9.69 a week. That's surprisingly affordable. Join now at Revo Fitness Blair Athol or download the Revo Fitness app. RevoFitness.com.au or find the Revo Fitness app in the App Store.
Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. How does one of Australia's top fund managers find opportunities in an extremely volatile market? Remember, this is general information only and you should seek professional advice before making investment decisions. Jun Bei Liu is co-founder and lead portfolio manager at investment firm 10Cap. 10Cap launched earlier this year when Jun Bei moved across from Tribeca, where she had a stellar run managing Tribeca's Alpha Plus strategy. When she launched 10Cap, she migrated around $1.5 billion in funds under management to the new business. She joins me in the studio today. Good morning. Welcome to Fear and Greed.
Good morning. Thank you very much for having me.
So you officially started in February, and here we are 2 months later, and perhaps the most volatile market we've seen, certainly since COVID. Did you anticipate any of this?
Oh, look, clearly not. And then nothing like launch a hedge fund straight into a market volatility. That's right. Look, we started the year in January thinking, look, what can go wrong with the share market? So we are seeing the, bit of tariff talk here and there, but based on what we saw last time, couldn't be too bad. So we had a very, very strong month in January. We saw the Australian market hitting 4.5% and, everyone was doing well. And then clearly when the tariff discussion happened, this is when we realized, and as investors, that we didn't know where this was going. There was so much uncertainty. What was even worse is that because of all this uncertainty and the negative headline every single day there in the US, we are actually seeing some of the real impact coming through for their economy. Not so much Australia, but over there in America. So we're seeing the consumer confidence has been hit. We're seeing the corporates are sort of putting on hold whatever they are going to spend because they don't know what the policy look like. So it is something that was really just sentiment shifted from just sentiment into something that's a little bit more real. So this is what the market is trying to grappling with is essentially, is the US heading for recession? I think that's why you're seeing the big sell-off.
So is the US heading for recession and what does that mean for Australia? I want to come to China and talk a fair bit about China, but just park China for a moment. The US drives the global economy. Is it heading for recession?
Look, it's not heading for, well, in our view, it's not heading for recession. However, if it continues on this path and assuming the Fed doesn't come through with rate cuts and others, then it is well have that chance to be on the path to be the recession. So we see so many possibilities that it will get off that path, as in we have stability and we have, outcome of what happens to tariff. And so the business can deal with it. We have the Fed stepping in if there's real weaknesses in the consumer in the US. Remember, the consumer was doing very, very well. It's now sort of just paused somewhat. So, Fed will come through. So with all of that combined, we think the probability for a recession is very, very small.
How hard is it then to manage money when you have such uncertainty? I hear what you're saying. It's a small chance of a recession in the US, but we don't actually know what Donald Trump's going to do. And you've got to manage money for your clients. How hard is it with all that uncertainty? Yeah,
I think with that uncertainty, essentially at portfolio level, we are seeing opportunity. You have to separate out what we do know and what we don't know. With tariff outcome is something we don't know. And it can be binary. Yes, maybe it has it, maybe it doesn't have it. So whereas the things that we do know is that some companies have become significantly cheaper. And some of those businesses, the earnings who are not impacted, maybe they're Australia-focused businesses, maybe they're growth businesses with structural growth driver that's not sort of linked to, economic activity. And these companies have become so much cheaper. And this where we see the opportunity. So as a portfolio manager, this really reminded me of the COVID period when the share price fell. But back then we had a health crisis.
Yeah.
Right now we don't have health crisis. We have Donald Trump. But just separate out what companies might have downgrade and what other companies don't. They just become a lot cheaper. And that's where we actually putting our money into.
So the US facing companies, and I'm not suggesting that you invest in any of these, but it's kind of the Brevilles and the James Hardys and some of those sorts of things. Are they stocks where you probably a bit more, you shy away from a little compared to the really domestic focused They might be industrials, they might be retailers, that type of thing.
Yeah, definitely. Look, I do think the James Hardie is really hard because the company itself is actually trying to buy another business, top of the market, and no one likes it. So that is the issue at the moment. Breville is very, very hard because if you just assume, not even the latest 140 odd percentage, during the first discussion about the tariff, I spoke to the company. The impact on the business is enormous, and they have to put through so much price increase through just to recover the cost. And then clearly their clients are not going to do that. Some of the biggest retailers there in the US. So, the hit to them will be enormous if it comes through as whatever it's been discussed. So it's just uncertainty. It's not even the sort of place where you want to be short selling. Remember, we can short sell as well because it's risk. Tomorrow, China and the US do a deal. These share prices will rise significantly. Absolutely.
Stay with me, Jun Bei. We'll be back in a minute.
2 words, Revo Fitness. Here's a few more. Simple, 24/7, Reformer Pilates, body scanners, massage chairs, squat racks, free weights, pin and plate loaded equipment, no lock-in contracts, no bullshit. All of that and more from just $9.69 a week. That's surprisingly affordable. Join now at Revo Fitness Blair Athol or download the Revo Fitness app. RevoFitness.com.au or find the Revo Fitness app in the App Store.
I'm speaking to Jun Bei Liu from 10Cap. What about China? How do you invest in China? Now, and I'm even talking about investing in BHP because they sell a lot of iron ore to China, right through to investing literally in China. How do you see China?
Look, I think China is going to become more inward facing in terms of where they are spending their money or where they're stimulating their economy. They don't want to remain to be a very export oriented economy. They want it to be more like Australia and the US. Eventually, consumer drive becomes a big part of the GDP. I think their consumer sector is still something only like less than 30%, whereas Australia is 60% and US is more. So that's what they're trying to do. When we invest in China, we want to invest in businesses that's exposed to that thematic. In China, it's very important. Whatever you invest in, you want to be going the same way as the government. You don't want to go against it because things can turn. So right now, any Chinese consumer facing company is doing quite well. If you look at the A2 milk, for example, it's doing incredibly well. Now, very good business. They're gaining share. Their products actually is penetrating into all different tiers of cities. So it's doing really well. And then the government's throwing money at household to stimulate birth rates. So that's doing well. The iron ore is a little bit harder, but I have heard that there is now China is going to come up with more packages to stimulate its own economy to deal with the tariff impact. So iron ore perhaps will have a pop, but it is much harder to call.
Okay. And do you invest directly overseas or you only invest in local?
Yeah, I only invest in Australia. So we can play through whatever the exposure that we have, the Australian companies.
Okay. So you mentioned A2 Milk there, which is a great example. They're selling, a company which has really ridden a bit of a roller coaster since COVID particularly. What other companies do you think have interesting exposure to China that are worth looking at? You're not necessarily recommending them, but worth looking at.
Look, I think A2 Milk is really good. Treasury Wine is actually really good.
I can't get my head around Treasury Wine. Like every time I like it, it goes bad. Every time I don't think much of it, it goes well.
I think the challenge for Treasury Wine is that whilst China is doing really well, it's going to drive pricing, and Penfold is doing really well. It's everything else in that portfolio is not going well. And the challenge is that in the Western economy, in Australia, US and Europe, people are drinking less alcohol. I think that's the big trend. So we're seeing latest data, even here in Australia, any company exposed to alcohol sale is down materially there in the US as well. So we don't know if it's structural or if it's just young people don't drink alcohol anymore. But hard to imagine. But anyway, that's hard to imagine. I don't know what they drink, but it is what it is. But it is a company. Remember, has a very strong portfolio of brands. So Penfold is the biggest one. It has a very strong asset backing. So if you look at the all the Penfold that they have in the vault plus all the farm they own, it's probably probably about $9, and that's not very far from where the share price is. So look, it has a natural floor to the share price, but it just seems like the alcohol needs a fire for it to go higher.
Yeah, okay. What about away from China? What are other stocks on the market? And remember, listeners, this is not an investment podcast, so please seek your own advice before making any investment decision. What other stocks do you like, or a stock you like?
Sure. Look, there's plenty of stocks at the moment because they've become so much cheaper. Remember the area I talked about, the growth companies that's not impacted and they're much cheaper? Well, the things like Promedicus, the imaging business that, really dominating the world, doing really well, 20% cheaper. You've got Cochlear, not impacted by tariff, and share price much cheaper now. And you've got the likes of REA.com, share price has come off, on the back of, people selling all expensive companies. Of course, there was a bit of threat of whether CoStar come in to buy DeMay, and now seems like that plan is a little bit ice, but we don't know. Regardless, for the next few years, this company is going to do really well, much cheaper than it is. I can keep going. There's plenty of them.
I mean, there's threads through this when you think of Promedicus and REA. The fact that they've sold off gives an opportunity, and what is happening now may or may not be long-term, we don't know. But investing is actually a long-term exercise, isn't it?
That's very important to remind everyone. That's right. Short-term fear sometimes makes you feel like that's going to see the world collapse, but it doesn't. We always come through it. Whenever we see sharp fall like this, which is very rare, once every, 5-8 years, that's your greatest buying opportunity, particularly for companies whose earnings are not impacted. Because if a company is going to downgrade their earnings, then it becomes a problem.
Yeah. Jun Bei, I've got to ask you, do you really wake up at 2 a.m. every morning and check the US market?
I do. And these days, it's a bit harder to go back to sleep when it's so
roller coaster. How do you go back to sleep?
Oh, look, I think I do get used to, this morning I got up looking at the market and I started just going around cleaning my house. But it's just something that I do. I get quite excited looking at the market and looking at what sectors start thinking about what it is. And maybe...
I think you'd be an irritating mother because your children will get up and you've already been up for 3 hours and full of beans, and they're not.
That's right. I start telling them that they have to get themselves ready.
Yeah. Jun Bei, thank you very much for talking to Fear and Greed.
Thank you very much for having me.
That was Jun Bei Liu, co-founder and lead portfolio manager at 10Cap. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.
2 words, Revo Fitness. Here's a few more. Simple, 24/7, Reformer Pilates, body scanners, massage chairs, squat racks, free weights, pin and plate loaded equipment, no lock-in contracts, no bullshit. All of that and more from just $9.69 a week. That's surprisingly affordable. Join now at Revo Fitness Blair Athol or download the Revo Fitness app. RevoFitness.com.au or find the Revo Fitness app in the App Store.